Don't forget to like, subscribe, and hit that notification bell. Hey guys, thanks for joining me. And the contents of this podcast, in my view, are going to be incredibly important for your trading and investing over the coming years. If you haven't already cottoned on to what's going on in the markets, a lot of what we're about to see in the charts I'm about to show you is kind of hidden a little bit beneath the surface. But by the time this becomes obvious to everybody, for some, it may be a little too late, particularly by the time people take action on what they're seeing, because they won't want to believe what they're seeing. It's the same problem that catches people out every time this happens. And we're getting a signal from the charts now that is delivered maybe once every, I don't know, maybe once every 15, 20 years, something like that. And in fact, this signal has only been delivered 3 times so far in the last 100 years. So what am I talking about? I'm talking about capital rotation, of course. Now, this is a phrase that I sort of conjured up a little while back, kind of unaware that it was sort of a phrase that is already being used or had already been used. I hadn't really heard it being spoken about previously, although I was aware of cyclical behavior, cyclical behavior of stock markets and precious metals. So as time has gone by, I've developed a series of charts that have been pointing in one particular direction for what is coming next. And if you follow me on social media on X, then you'll know that back in 2019, I was able, even with the techniques that I was using back then, to point to what was going to happen to gold in 2019 and 2020, and then what would happen for the following 3 years, and then what would happen when that consolidation process came to an end. So if you look at my feed on X, you'll see that forecast that I issued back in 2019, which is now complete with gold hitting the mid 2000s, $2,700 plus, of course, now. So what's going to happen next, and why is it so important, and what is capital rotation, and how does that tell us or help to tell us exactly what's coming? Okay, I'm going to share my screen now, and we'll get straight into it. And I'll try and keep this as clear and as straightforward as I possibly can. As I always do, I'll try to explain myself in a way that if you don't know very much about technical chart analysis or stock markets and precious metals, that you will hopefully still be able to understand what I'm talking about. So I went on to ChatGPT and asked it, right, what is the definition of capital rotation? Capital rotation is the movement of investment capital from one sector, asset class, or region to another based on changing economic conditions, market trends, or investment opportunities. Investors and portfolio managers engage in capital rotation to optimize returns, reduce risk, or take advantage of emerging growth areas. The strategy involves shifting assets between sectors or industries that are expected to perform well while reducing exposure to those that are likely to underperform. Now, that's very important. Just remember that. Those that are expected to perform well and those that are likely to underperform. That's critical because fund managers, the guys with the big bucks, the big money, are well aware of what I'm about to show you, and they are already doing this. For example, in times of economic growth, investors may rotate capital into cyclical sectors like consumer discretionary, technology, or industrials. Conversely, during economic slowdowns or uncertainty, capital may rotate into defensive sectors such as utilities, healthcare, or consumer staples. Now, they're talking about S&P sectors there. In this context, I'm talking more specifically about stock markets versus precious metals. Okay, that's the capital rotation I'm interested in here. Now, types of capital rotation, you have sector rotation, geographic rotation, asset class rotation, and thematic rotation. Well, really here I'm talking about sector and asset class rotation primarily. Geographic rotation less so, and thematic rotation does play into this as well. Different themes rising and falling during their cyclical bull markets and bear markets. Capital rotation is a dynamic strategy that requires continuous market analysis and a forward-looking approach to where value and growth opportunities are shifting. Okay, now what I want you to take away from that is that capital rotation is something that you can identify, and we can identify it using technical chart analysis, comparing one asset class with another. Now then, let me just show you my chart, and I'm going to switch my video camera off just so that you don't get distracted with a picture of me in the corner. Okay, that's my video camera off. Okay, right. Now then, this is a series of charts that I would argue identify and define the capital rotation that I'm talking about. And what I'm talking about here is when stock markets are in a bearish trend, and the biggest performing alternative, the sector that gains the most is, or sectors that gain the most, are precious metals and commodities, perhaps energy as well. Okay, now this series of charts, as they begin to break down versus gold and enter bear markets versus gold, then it is a sign that capital rotation is taking place. So this is US M2 money supply to gold. In simple terms, if you haven't got a great understanding of technical chart analysis, when the chart moves down and breaks below clear support, then we enter a strong gold bull market era. And you can see here on the left-hand side, during the early 2000s, this chart dropped a lot and gold went up 600 or 700%, or maybe even a bit more. We've then had a period from 2011 roughly to 2000 and let's say 22, where the chart was rising. So it wasn't really supportive of a precious metals bull era. But now the chart has broken below the moving averages, below this red and green splodge, which is something called the Ichimoku cloud, which acts as key support. So effectively, we've broken through support levels and we're now in a bear market. So we are, and I drew this chart back in 2022. So before we had moved all the way down here, I put this orange arrow on the chart and said that we are likely to see a huge gold bull market. Now we've moved from $16, $17, $1,800. We've moved up by $1,000 to $2,750 so far. So everything that's happening at the moment confirms what I suspected on that chart. This is gold versus CPI. Okay, so when this chart moves to the upside, when it breaks out to the upside, it means that gold is outperforming CPI, consumer prices, a proxy for one way of defining inflation. So when gold is outperforming inflation, it puts you into a gold bull market era. And you can see that from 1970 through to 1980, when gold doubled, and then it doubled again, then it doubled again, then it doubled again, this chart was moving up. So this is a gold bull era with a chart moving up. Then from 1980 to roughly 2001, the chart went down and gold was in a bear market. Okay, then it broke out and we got a signal here that we were in a bull market, and gold broke out versus CPI and rose. Now we've had a consolidation period effectively actually since 2011. Gold went into what I would call a mini bear market, although it doesn't quite fulfill all the requirements of a full-on bear market era. But nevertheless, gold fell from $1,900 to $1,050. That was a big drop. But I would argue that this whole period has been a consolidation on this chart and on the gold chart, and that this breakout here puts us into a new gold bull era. Okay, rotation of capital. You can see the capital rotation events. The green ones are in favor of gold, and the red ones are when capital rotates in favor of other asset classes, not gold, and primarily the stock market. So red, you get into the stock market. Green, you get into gold. Red, you get into the stock market. This black one here was an indeterminate signal that gave a bullish signal that we would go up to test this resistance line, but then we consolidated again for another 3 years. We've only just broken out. So that's the green signal. The green signal because we're above the moving averages, above the Ichimoku cloud, and we're broken out above the main overhead resistance level. So this chart is telling us capital rotation is in force. Gold versus PPI. Gold versus PPI is on this quarterly chart. Let me just adjust the resistance line. On the quarterly chart, it's broken out. We are in an uptrend above the 12 and 36 period moving averages. We are above the Ichimoku cloud, and gold is in a bull market versus producer prices. PPI is producer prices. So the signal from this chart is capital rotation is taking place. The capital rotation event is now in full force. The Dow to gold ratio, very, very important chart, this one, critical chart for everything that we're looking at. I'm just going to minimize the right-hand stuff there and just expand the chart. So signal number one, in 1930, the chart broke down. This is gold versus the Dow Jones versus gold. So when the chart goes up, the Dow Jones is in a bull market and gold isn't. When the chart goes down, gold is in a bull market and the Dow Jones isn't. When it goes up, Dow's in a bull market, gold isn't. When it comes down, gold is in a bull market and the Dow isn't. Okay, so we broke down here in 1930, which told us at the breakdown that we were entering a period where we were going to see gold in a bull market and the Dow in a bear market. What happened? The Dow fell over 80% and gold got revalued higher. Gold was pegged at this point, and this movement was so forceful that the peg broke. We don't know what gold would have done in a free market. My suggestion is that it would have doubled and then doubled again, then doubled again, and then doubled again, and probably have gone up some more after that. But gold wasn't in a free market, it was pegged. The peg broke and it had to be reset 80%, had to be reset 70% higher. Okay, 1970s, the peg was removed between the US dollar and gold. And so we were able to see what would happen in a free market. Signal number two was given in this period between sort of 1968 and 1972 as the chart broke down over a period of a few years. Final support gave way, and the net result was that the SPX fell 50%. It fell 85% back in 1930. Here in the early 1970s, it fell 50%, and it took 10 years to get back to where it previously was. I mean, in 1930, it took 24 years to get back to where it previously was. But anyway, in the 1970s, it took a decade. And in that period, gold rose around 2,400%. Gold doubled, then it doubled again, then it doubled again, then it doubled again, then it doubled again. So just bear in mind when people say gold can't double and then double again and then double again because we won't be able to afford to live. Well, I'm sorry, that's not true. In the 1970s, that's exactly what happened, and the world continued. Not only that, but signal number three came in the early 2000s when this chart broke down again at capital rotation. This is capital rotation in favor of gold and putting the stock market into a tailspin. The S&P fell 50% in the early 2000s, and it took 13 years to get back to where it previously was. Remember that, 13 years. And in that period that it took the S&P to get back to where it started from, gold rose around 650%. Okay, gold doubled, and then it doubled again, and then it went up another 80% or so. So brings us to where we are now. Signal number four. This is the fourth such signal for capital rotation in favor of gold in the last 100 years. We're breaking below support, below the rising trend line, below the moving averages. We're just about to pierce the Ichimoku cloud on this quarterly chart, and in doing so, fall below critical support. Okay, so we are already, we have already broken down, and as time goes by, this breakdown is becoming more and more obvious. Okay, moving on from that critical chart to gold versus the New York Composite Index, another stock index. So this chart, when it moves upwards, you have capital rotation in favor of gold. When it moves down, you have rotation in favor of stock markets. Up in favor of gold, down in favor of stock markets. And where we are now, we're breaking upwards in favor of gold. And if I zoom in on the monthly time frame, you can see the breakout there. We've broken out above the moving averages, above the Ichimoku cloud, and this is capital rotation in favor of gold. I'll just go back to the Dow versus gold chart onto the monthly time frame, which is the one we're defining the breakdowns by, really. And we are below the 12 and 36 month moving average. We are below the monthly Ichimoku cloud, and we are below critical support. Okay, so capital rotation confirmed from both of those charts. This is the US dollar index versus gold. Okay, the US dollar index is a basket of currencies that measures the US dollar relative strength. It's primarily the euro, actually, more than 50%. I think it's about 58% of the DXY is made up of the euro. So DXY has fluctuated between, I don't know, off the top of my head, something like 60 and 160. Don't quote me on that. But anyway, for the last 50 years, DXY has been oscillating in that range. Sometimes it's stronger than other currencies, sometimes it's weaker than other currencies. But the point is that if gold, or sort of put it the other way around, if the US dollar index cannot outperform gold, it's telling you that whatever relative strength that the US dollar has, it's being beaten by gold. And each time this chart moves down, you have a huge gold bull market. The chart moving down tells you that the US dollar index is underperforming gold. Therefore, any relative US dollar strength is not able to outpace gold. And that's a particular indicator, a particular sign of underlying gold strength, which you get in a gold bull era. Even relatively small moves to the downside can send gold up 60%. But when you get a long period of this chart moving down, gold moves up hundreds of percent. Now we've just broken down again below what I call the sleep mode line, and that's when the chart goes into sleep. In other words, any upwards trend is ended. You see this upwards trend, upwards trend, upwards trend, and then it broke below the sleep mode line, and the ratio sort of goes to sleep, if you like. It's any bull market moves for DXY are over. So even though the US dollar index has been doing well recently, and it's moved from 70 to 103 or something like that over the last several years, gold has gone up by many, many hundreds of dollars in the time period that the DXY has gone from 70 to 103. And it's because there is no overpowering US dollar strength in relation to gold, and quite the opposite now. And during this little breakdown here that we've had so far, gold is up 68%. And because we're broken below the sleep mode line, as we did here, my suggestion is that this chart is telling us we have a capital rotation event on our hands. Critical information. The equal weighted S&P, strip out the weighting that is given to companies like Nvidia, for example, which in a way kind of distort the S&P and what's really happening. This is the equal weighted S&P versus gold. And when the chart moves up, stock markets are in a bull era. And when the chart moves down, gold is in a bull era. So you can see during this period here, as the chart was moving up, gold fell from 400 to 250. But then when we had capital rotation, we went from 250 to 450 to 1,000 to 1,900. So gold doubled to 500, it doubled to 1,000, and then it almost doubled again to nearly 2,000. Then we had another capital rotation in favor of stock markets, and gold went from 1,900, it actually went to $1,050. When we touched the edge of this inverted arc here, it's $1,200. And at that point, the bear market in precious metals was effectively over, and it's just a waiting game for the consolidation period to play out and for this chart to break down. And it is now broken down below the moving averages, below the Ichimoku cloud, below this final support line. And we've moved from 1,200 gold to 2,700 gold. We're going to move to 5,000 gold and then 8 to 12,000 gold. This is the roadmap for the equal weighted S&P versus gold. So this is telling us capital rotation is taking place, and that rotation is away from stock markets towards precious metals. Now, if we look at the S&P versus gold, and if we look at NASDAQ versus gold, they haven't quite broken down yet in this fashion. And that is because, as I say, we have the Mag 7. So let's look at the Mag 7 and let's start, shall we, with Tesla. Tesla has been in the bear market versus gold for a long period of time now. I'm just going to get rid of this volume on the right-hand side. I'll get rid of the volume at the bottom because we don't need it. Tesla has been in a bear market versus gold. It broke down and that told us or gave us additional evidence that we were in a capital rotation event. Now let's look at the rest. Google versus gold, breaking down, okay? Rising support line, break below support, back test, back test, back test, breaking down below the moving averages, pushing down almost below the Ichimoku cloud. We're already below the rising support line. There's a horizontal support line here that we're in danger of breaking through now. That will be a breakdown. That will be another one of these to get a red flag, which will tell us that we're adding more evidence to capital rotation taking place. Amazon, rising support line, wedging into a decision point below the moving averages. The 3-year moving averages already turned down below the Ichimoku cloud. This is bearish, and a breakdown here would be confirmation of capital rotation. Apple versus gold, also showing signs of breaking down. It's failed to break out above horizontal resistance. We are now below the moving averages. The 12-month moving average is bearishly crossing below the 3-year moving average. So that is giving us a setup for a downside move to confirm capital rotation. Meta is one of the two charts that is not yet strongly suggesting capital rotation. So Meta is holding up above rising moving averages, above the Ichimoku cloud. Only a move through this red zone here will be the final nail in the coffin for Meta. Microsoft is giving capital rotation confirmation. We've broken down, we're below both moving averages, and we are trending down below the well, we're in a trend that will take us down below the Ichimoku cloud for final confirmation of capital rotation. Nvidia is the other one that hasn't broken down versus gold. It continues to look strong. If this bear move ever breaks down or fails to break out, then that will be a problem. It carries such a weighting now in the stock markets. It's a multi-trillion-dollar company, something like was it 3 trillion, something like that last time I looked. The metrics aren't on here for some reason. I'm not sure why. They usually are shown down here. Anyway, moving on to gold versus the S&P. This is these last two charts are the critical final confirmation for capital rotation. So gold versus the SPX. You can see the rotation events, or the last couple of rotation events. Rotation in favor of the stock market. The chart moves up through the moving averages, through the Ichimoku cloud, precious metals bull market, stocks bear market. Rotation in the other direction, precious metals bear market, stocks bull market. Stocks go up by a huge amount, and precious metals fall by nearly 50%. Now, we've been in this period since 2018 where the stock market has not outperformed gold. The ratio has gone sideways. Both stocks and precious metals have been in the bull market. When we cross this red line, the breakout line, and particularly when we get close to 0.5, then we're going to be giving confirmation of a capital rotation event defined by the full weight of the S&P. And this chart is screaming capital rotation event approaching. It's telling us effectively that there are very bright lights coming through the tunnel towards us. And if you don't step out of the way, then you will get flattened. And finally, finishing off with gold versus the NASDAQ. Gold versus NASDAQ is putting in what looks a little bit like a double bottom here, actually, and will probably be the last to confirm by moving through this evidence cluster. That is the 12 and 36-month moving averages, the Ichimoku cloud, and the resistance line. So a strong rollover of NASDAQ and tech stocks is required for this chart to break to the upside. But this looks to me very much like a setup for a reversal and capital rotation confirmation from the Nasdaq. It hasn't given that confirmation yet. It's putting in what looks like a basing pattern, a bottoming pattern, but that cannot be assumed. We have to wait for the evidence. But overall, looking at all of these charts that I've just gone through for you, I think it's safe to say that the capital rotation evidence is now becoming strong from all of these charts that we've been through here. You can see the capital rotation evidence is indeed strong. And I'll just finish off on the graphic that I've been putting out on social media for you. If I can find that, let me just go onto my X feed and show you what I'm trying to get across here. We have, yeah, this one here I think will do. We have an indicator, capital rotation indicator, and each time one of these cells in the matrix turns red, the needle moves round one more. Okay, and we're up to 8 out of 16 now. So USM2 versus gold, capital rotation confirmed. DXY versus gold, capital rotation confirmed. CPI confirmed. PPI confirmed. Dow confirmed. New York Composite confirmed. Equal weighted S&P confirmed. Tesla confirmed. And as you saw, a number, in fact, 4 more of the Mag 7 are close to confirming. So 4 more would take us to 12 out of 16 from where we are at the moment. So that would leave just the 2 remaining Mag 7s, which is Meta and Nvidia, and the S&P and Nasdaq. Those 4 probably going to be the last 4 to turn red. By which time, of course, we will actually be quite well advanced in the capital rotation process. But you do not get all of these boxes that have turned red. You don't get them turning red except in capital rotation events. It's a process, the capital rotation process, that gets final confirmation when S&P and Nasdaq turn red on this matrix. So you can wait until S&P and Nasdaq turn red on this matrix if you want to, but by then S&P and Nasdaq will have fallen a lot, probably at least 20 to 25%, and gold will be probably at least as high as it is now. It doesn't need to rise very much. It's possible that as the stock market falls, gold could initially take a little bit of a hit, but that the ratios sort of trend sideways for a little while. But regardless of that, and any initial effect it has on precious metals, capital rotation events favoring gold will resolve with gold breaking strongly to the upside as stock markets struggle to recover over a period of many years. Okay, that's it for this podcast. I hope you enjoyed that, and I hope it was a good explanation of capital rotation and the evidence behind capital rotation and why we are bullish long-term on precious metals and much less bullish long-term on stock markets. Stock markets have not broken down yet, but as and when they do, this evidence will be becoming much stronger. So keep a very close eye on what's happening. Do not ignore this, because if you do, and also if you're a crypto investor, this is very important as well because of the link between cryptocurrencies and tech stocks, of course. So do not assume anything in relation to stock markets or cryptocurrencies, and continue to follow the roadmaps that we are laying out. And if you find this fascinating, interesting, useful, and you want to know much more, then please take a look at northstarbadcharts.com. We cover this in great detail every week for our members, and we cover the markets, everything from stock markets to precious metals, base metals, commodities, energy, currencies, cryptocurrencies, uranium, and a whole lot more is covered every week in our Market Roundup podcast, along with our trade navigation system, our trend navigation system for giving signals for long-term trends across a variety of sectors, including gold and silver, and of course also trades on a shorter term basis as well. with sound risk and money management protocols applied. So if you like the sound of that, as I say, please visit our website. Okay, that's it from me for now. Have a great day, and no doubt speak to you all again very soon. Bye-bye.